Okay, let's get you street view at lunch on that note. Anil Rego, founder and CEO of Right Horizons, joins us live on the show. Anil, afternoon. Thanks for joining us on the show. First up, what is it that you think the street is expecting from the RBI? I guess no one's expecting a cut in key policy rates, but do you think we will see a cut in CRR?
Yeah, I think that definitely that is a possibility here, okay? Because directionally, I think it's reasonably clear and all projections point to a lower inflation rate. Already food inflation is down negative, okay, and that's the number that I think everybody has been waiting for. So clearly the direction, I think everybody is in consensus that we should see rates going down. The big question is, whether RBI would, go ahead and cut interest rates and not just the CRR. So I hope they would, because I think they were very aggressive and hawkish in increasing the rate. So I hope they will actually this time come and surprise everybody, and I think that is what will help industry and provide some impetus and direction to markets as well.
Anil, what about the cap goods space? L&T has just come out with its quarterly performance. It's the fourth quarter picture that they've painted as a very gloomy one. What is it that you're expecting from cap goods performance? Because we've seen L&T and as to how the management commentary on the guidance for the future in terms of their order inflow has been pretty sticky in any case.
So I think, see, a lot of the macro factors and on the ground tight liquidity, all of that in a sector which is, really requires capital there. So I'm not surprised by that, and that's why when I'm suggesting that, if RBI comes in strong, maybe we could see some, upside surprise there. But I would typically expect a relatively weak Q4 and possibly in line with Q3. I just hope that, the impetus comes in.
And then what about RIL? How did you read the numbers and what would you do with the stock at these levels?
So I think, the buyback definitely would have been good if the results were good, and people would have accepted it well. But, the street are just wondering that is it a lollipop when results are bad. So, but I think directionally, RIL has underperformed for a reasonable period of time. I would start believing that some of the negatives have got priced in. So I think the long-term view is positive as long as we see the industrial and economic view of the country remain positive.
Right. Also, what about the IT pack? Now that all the four big players have reported their earnings, what would be your preferred pick in the IT space?
Well, I think the reactions have been, pretty wayward and not necessarily, in line. Infi saw a big drop there. Some of the other numbers were a little better. I would guess it all, I think, boils down to, how at least the IT would depend a little bit on the global environment. Both, I think we need to watch Europe a little closely. US is definitely showing strength there, and one number that I've been waiting to watch for a long time, has come in there in terms of home sales, best numbers in a lot of years. So that's definitely a positive. So I think as long as their core markets don't fall off, I think IT will still be good and strong there. I would at this point of time still stick to the large caps, maybe a TCS, somebody who wants to be more enterprising than possibly a Wipro, because I think a lot of the restructuring will start bearing fruit, and Infi as well. I think that's another stock which will continue to do decently. So the rupee, of course, I would expect, well, if the global environment is not very negative, then I think the rupee will start appreciating there. So some bit of the gains that they saw, thanks to the rupee, may go away a little bit.
Okay, Anil, good to have you on the show. Thanks for taking time out and joining us today on ET Now. That's the view coming in on the fundamentals of the market. What about the global markets? Let's tell you how Europe has kick-started the day. They were expected to start off mixed and rather